Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. I've been getting a ton of questions about is AI in a bubble, is technology in a bubble, and what can you do to prepare? So that's what we're going to be talking about today. So I hope you guys all enjoy it. If you guys have any questions, feel free to ask down below. If you guys want to learn more about investing and trading, I highly recommend checking out the Swing Trading Masterclass. That is our school where we teach people pretty much my approach when it comes with trading the markets. I've been doing it for over 6 years. It's something that I have a huge passion for, and I don't believe in getting rich quick or anything like that. I think those are all scams, but I teach proper strategies to make money in the market. So check it out. You guys can use code YouTube for 20% off. Only a couple of spots left for that code. But guys, let's jump into this here. So with AI, what we've seen pretty much every single year over the past 2 years is growth. Growth, buying pressure, unstoppable future is what we always hear. But, you know, a lot of people lately are getting a little nervous because we're seeing companies like NVIDIA up last year 230%. This year up well over 100%. And just every day it almost seems like it's hitting new highs. Oh, NVIDIA is doing this, doing that. And that's fantastic. That's fantastic for me because I'm heavily invested into all of those stocks. But you also have to have the approach of everything doesn't always go up. And I think a lot of people don't realize that. I think it's smart to have some sort of defense as well in your portfolio. And that's kind of what I want to talk about here today. So we're going to be looking at a very, very popular ETF. This is ticker symbol AIQ. This is a global artificial intelligence ETF. And you guys can see the holdings are off on the right here. And we have a whole bunch of companies that are heavily invested into technology, AI, artificial intelligence, and all of that good stuff, which is awesome, led by the one and only NVIDIA. And looking at this, what do we have? Great upward trend here in the past couple of months. And even looking at NVIDIA, we can pull that one up as well. Look at the stock just on a non-stop roar of buying pressure, which is awesome. This is great to see, but you have to have the approach that nothing goes up forever. And what I mean by this is stocks, they go in cycles, you know, just like the general stock market goes in cycles. Every 4 to 6 years, we get a crash on average. Sometimes it's more, sometimes it's less. Now, what I also think is sectors, in my opinion, go in cycles as well. Looking at a company here, I do think is very, very important, and I'm sure you've heard of them. Tesla. Back in the day here, Tesla was on a non-stop roar of buying pressure. Everybody was buying Tesla. It was the hottest stock. And what also was going on was the electric vehicle phase. I'm sure you remember where companies like Nikola Motors, Plug Power, all these very, very small companies that were honestly worthless and they weren't producing any revenue. They had no clear future. They were like, everybody was buying it because they saw Tesla and they wanted that next Tesla. Now followed by this here was a whole bunch of bad stuff. We got just this general downward trend. It sold off, honestly, a good amount from highs all the way down here, selling off 72% at one point before getting a little rebound. Now, why is this important here? The reason I brought this up and the reason I wanted to talk about this is because I'm seeing a very similar thing with AI. I'm seeing companies that are doing a whole bunch of great stuff like NVIDIA, like Google, like Apple, but then we're also seeing companies that are just kind of saying AI, I swear, in their name, and that everybody just bumps and puts money in it. It's crazy. I do think we will see a reset, not like a huge crash or anything like that, but a little correction. I think is very healthy and it's going to be very, very normal to do. So what's the approach? How can you have a little defense in your portfolio? One, you can have a little more cash. I always think it's important here, in my opinion, to hold about 5 to 10% in cash. Now, what that means is for every $100 you have invested, put $5, $10 on the side for cash. Very simple. The reason why is because if some of these stocks here sell off, having cash on hand, you can dump money into it, which is awesome. The second approach is to not even try to time the market, because yes, historically, looking back, it's always better to have time in the market than trying to time the market. So another great approach is to dollar cost averaging. Investing consistently into, AI and companies you believe in has historically been a very, very good way to invest in the growth stocks. And the reason why, let's look at Tesla here as an example. So if that's just say you guys started investing here at all-time highs, we can even say here, right at 288. You guys can see that we slowly got, sell off. Now, if you started investing at 288 and you continue to invest here all the way down to 188, your average cost would be near and around this like 230 range, right in this range here. So now as you continue to invest here, now your average cost is going lower and lower because the stock's cheaper. And look at this, we had this good growth here. So and dollar cost averaging and with growth stocks is a very, very good way to get a good average price and use sell-off. Using the sell-off, now if you're investing during all these dips, now your average cost could be even lower at $200. And so now as you get more buying pressure like we've seen, your average cost is so low that you're making more money as the stock recovers. And I do think Tesla's a little different as an example, but it's still worth noting. Dollar cost averaging, historically a very, very good way to invest. I just think here, what we're seeing is a lot of companies like Nvidia, like all these great stocks, just kind of getting fueled up by AI. Let me know what you think. I just think that everything must come to an end, and it's just a matter of time before we get some sell-off from these huge, huge stocks. And yeah. We saw it with early.com bubble. We saw it with electric vehicles, and I think we'll probably see it with AI. Let me know, guys, down below, but I hope you guys all enjoyed it. And guys, in the meantime, yes, I have pretty much all the stocks that we covered today. I own Google, I own Tesla, so I'm not rooting for them to crash, but I am rooting for them to sell off a little bit so I can buy some more at just a cheaper price. So, guys, hope you guys enjoyed it. We'll see you guys in the next one. Take care.